Delta Corporation, in its trading update for the third quarter and 9 months of 31 December 2019, notes that the current trading environment is characterized by high inflation, unstable exchange rate, with limited availability of foreign currency in the formal banking channels. In the comparative period of February, the trading environment is characterized by the value of the RTGS dollar deposits that were being eroded by fast depreciating exchange rates and cost-push inflation. Low disposable income in salaries and wages of consumers has constrained consumer spending. Meanwhile, power outages and constrained fuel supply has also negatively impacted Delta's distribution and production operations. In a trading update for the fourth quarter and full year ended 31st March 2019, the acute shortage of foreign currency was noted, despite the introduction of the interbank foreign exchange market. The sourcing of imported raw materials and services remains a challenge due to the delays in servicing overdue payables. There was a decline of 43% lager beer volume performance for the quarter and for the 9 months compared to the same period last year as a result of the trading environment. The fourth quarter and the full year ended 31st March 2019 also saw a decline, which was, however, as a result of increases in RTGS dollar wholesale and retail prices. This has resulted in the corporation shifting focus. The Shogun beer volume in Zimbabwe declined by 41% for the quarter and 25% for the 9 months, impacted by the constrained supply of maize and escalation in the cost of imported inputs, such as packaging materials. At Natpu, Zambia, however, the volume was 32% down for the quarter compared to last year due to some pricing disparities with other alcohol categories, particularly driven by the steep increase in maize prices. The sparkling beverages volume grew by 38% for the quarter and is down 40% for the 9 months. Delta noted that volume recovery was in response to improved product supply and moderated retail pricing. The recently launched no sugar variants are popular and have been well received by consumers. Previously, this section of the business had been virtually closed down during the fourth quarter and full year ended 31st of March 2019 due to non-availability of imported raw materials. The demand for ciders and white spirits is reported strong, despite a concern about the illicit trade in some of the product categories, which may have contributed to the 10% drop in volume trade for African distillers, AFDIS, during the quarter. At Schweppes Holdings, an outage of the key imported raw materials of both Missouri and Minute Maid brands resulted in a 23% decline for the quarter. However, there was an improved performance on the recently launched Fruitaid range of products. To mitigate the power outages at the Harare factory during the quarter, the entity commissioned 1 megawatt rooftop solar plant. Delta shares are moving upwards and have gained over 9% as of 30th of January 2020. The revenue for the quarter grew by 27% in inflation-adjusted terms, reflecting the changes in product mix and price increases that are based on replacement costs. However, over the 9-month period, increase in revenue was only 2%. The operating environment is expected to remain challenging for the remainder of the year. The company states that it will manage the emerging risk with particular focus on reducing the foreign liabilities and maintaining consistent product supply. The current shortage of maize and the anticipated drought in 2020 is likely to impact negatively on the business, particularly the Shogun beer category. In their trading update, Delta also advised that the cautionary statement had been withdrawn following the renewal and signing of bottler agreements with the Coca-Cola Company. Corporates are now constantly reviewing their strategies in line with the harsh Zimbabwean economic environment. But for those companies with the right business model, there are still numerous opportunities in Zimbabwe.